Okay guys, welcome back. So now we're going to quickly go through market structure. Okay, so there's two types of market structure that we're looking for. Okay, and one is the major structure and the other one is the minor structure. Okay, and we're going to go through both of them in this video. All right, so I am going to go through, just draw quickly with the pen tool. Okay, but we are going to go through the charts as well in a minute, so I can sort of tell you how we sort of use this in our trading. So I typically look for reversals. So you can do continuation trades as well, all right, as long as you've got higher time frame targets that you're trying to get to. But we do go through targets later on in the course. Okay, so with market structure, then you typically get your starting point. You'll get a high, you'll get a higher low, then you get a higher high, then you get a higher low, then you get a higher high, and so on. So it just continues like this. All right, so you basically get your high here, and you get your higher low. Then you get a high, higher high, higher low, higher high, higher low, okay? But inside these here, you get smaller structure as well, okay? You get a little structure, little structure, little structure inside this. Okay, so this becomes your minor structure. And then inside this minor structure, you get even more minor structure, which is, it's microscopic, you know, almost microscopic. But then as you drop down your time frames, it will make that that structure more visible, all right? Now, if you're looking for bearish, you get your starting point, you get your low, you get your lower high, you get your lower low, lower high, lower low, lower high, lower low. Okay, so that's these points. So your low and your high, you get a lower low, lower high, lower low, lower high. Okay, and then inside there, obviously, you got your minor structure as well. Okay, so this becomes major structure and minor structure, and then again, you got even more minor structure in there. Okay, so what I want to quickly talk about is as we're going through this is sort of where to expect trades, okay, for like reversals. Right now, if you look at a higher time frame, you've got a move that comes up and you've got a high, okay, right there. You need to expect a retracement of some sort, okay, once you get to a certain point. Now when this high breaks here, you then go down to smaller time frame structure, okay, and you're then looking for a market structure shift to then ride the retracement back into a point of interest, okay, which we're going to go through in the course. And then you can get into a trend direction again, okay, with another trade. So you can get two trades. You get a counter trend trade, okay, and then you get a trend trade, okay, based on the higher time frames. Once you get this and you come into your point of interest, you take your profit off and you look for a position in a new direction. Once this level breaks again, you're then going back into smaller structure again, so your minor structure, to then look for a market structure shift to ride it back down again into a point of interest. Okay, so that's what we typically look for. So I don't like trend continuation trades, but I do use them, and I prefer my reversals, right? So if you're looking for down, you have a move down, a pullback. As soon as this breaks here, you start to anticipate a shift in market structure, okay, for a counter trend trade. Come back to your point of interest. So the point of interest can be things like order blocks or 50% of price acceleration zones or whatever. But when you come back up into that, you're then looking for your break of structure again for a trend trade, and then you break structure again on a higher time frame. Anticipate what smaller time frame structure break to get a counter trend trade again, okay? And you just continue this process, but we will be going through you know, the trading ranges later on in the course itself, okay? So I'm not going to go out through it in this video. This is purely for market structure, right? Okay, and now we're going to go over and have a look at what this looks like on the charts. Okay, so now I'm on GBP USD on the 4-hour chart. Okay, now this is irrelevant. The currency pair I'm using is just for example, and it doesn't really matter the time frame. It's just to get an idea of what we're talking about with the overall structure. Okay, now like I said, with trades that you're expecting, you'd be looking for either a break above a high or a break below old lows. Okay, so in this case here, we do have these lows that get broke here. Okay, right there, and you've also got a set of lows right here. Okay, so once you break through them, you're starting to anticipate a potential setup on a lower time frame. Okay, so these are your highs and lows. Now, your major structure, like we just spoke about now, your major structure would be this move, followed by this move, followed by this move, here, here, and then wherever this leads down here, okay, because it's all bigger structures. So this is your major structure. Okay, now if you're looking at minor structure, you take the same thing, you've got this, 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 okay, equal highs, come through, bounce there, and this is basically just your minor structure. Okay, so I'm just going to do this really quick, and you can see small structure within the bigger structure, okay, like that. Right, so how we use this in trading then. So once we get a level of interest in terms of we're coming below old lows, okay, we can start to go down to a smaller time frame. And what we're looking at, I'm going to drop down to an hour chart, but just for marking up this chart here, you have got a high, okay, and a low, and then you break, this low here using here. So this becomes your new range. So all I'm marking out here now, okay, is your high, your low, your lower high, your lower low, lower high, and so on. Okay, so I'm just going to remove these points here. Now I'm only going to quickly go through this really just to give you an idea of what you're looking for, okay, because I don't want the video to drag on forever and you guys to lose interest, right? So I'm going to go to an hour chart here, and this is what the hour chart looks like. So we've just gone from a 4 hour to an hour. Okay, now if you can't see market structure very easy, one thing you can do in your menu on MetaTrader or whatever platform you decide to use after this course, you will have the option for a line chart. Okay, now a line chart just sort of cleans things up a little bit. It gets rid of the wicks and sort of makes things run a little bit smoother. Okay, so you can just sort of see your highs and lows. Now in terms of this here, you can follow market structure with lines. Okay, so if you're in bearish market structure, i.e. going down, you're breaking lows, what you want to do, you want to draw a line on the most recent high, and when you make a new high after breaking structure, you move that to the next one again. Okay, this just makes it easy for you to see if you're going to get a break in market structure. Okay, so in this case here now, we had a high which then led to a break of this low point. Okay, and we broke it there. Okay, so that's our last point of interest for interest, to see if we can break this and shift in market structure. Okay, so that at this point here we have broken market structure there. Okay, so this is where we typically start to look for trading setups on lower time frames. Okay, so we'd be looking for longs. Now, I haven't touched on market targets yet, but you will learn it later on. But we typically target equal highs, equal lows, and things like that. Okay, so up here we've got those equal lows. If I go back to a candlestick chart, that's this level right here. So this would become a target for us on the higher time frame. We've already scooped up the liquidity underneath here. Okay, once we get the break of market structure, we can start to anticipate trades. Okay. Now, if I keep playing this at quite fast speed, okay, so as you can see now, we broke this high here, okay, but before doing so, we ran through these equal lows. Okay, if you can spot them right there. Okay, we ran through them and eventually broke. Okay, so when you go on to the course later on, you're going to find order blocks in the course. Okay, that'll be this point here. So it's the down move that causes the break. So this little down, let me just get a bit closer to the chart. This little candle here, these two down candles right there, they become one order block, right? So if there's two consecutive bodies, you can combine them and that makes one block. So all you're waiting for then is a retest of that level. Okay, so don't worry about trying to get in as it breaks. You're just looking for a retest. So that's the retest right there. So that'll be your entry point. Okay, and I'm going to zoom back out now. We're trying to get to this level up here, which is the higher time frame structure. Okay, so once we get up there, then we can see we plow through that, and then you start to anticipate another trade. Okay, so equal lows, run on the highs, break structure there. There's your entry point here. So let me just pause that quick. Okay, so we're already at a level where we're anticipating. Okay, we have these equal highs here. This drops down at this point here, but it doesn't break, right? There's no close below these levels. You just come and just wick the liquidity that was sitting there quite tight. And then we went higher. And then eventually we did break structure again at this point here. Okay, so there was a low point before the run on these highs. Okay, low point, run on the highs. It broke structure. And then, like I was just saying, then you have the last candle in the opposite direction as your entry point. Okay, so when it broke through here, that was the load level that caused it, or the order block that caused it right there. Okay, that caused the move out. And then come back up and retest it. Okay, so that would have been another trade there. Okay, so that would have been another trade right there. Okay, so I'm not going to go into targets on this. Okay, this was just to show you guys how you anticipate setup. So you've got a run below old structure. You're looking for a setup in the opposite direction. If you've got a clean level that you're going to look to target, you're going to get through that. And once price gets through that, it's going to take the stop sitting up here, and then they're going to start to offload large positions. And that's where you get this retracement here. Okay, so you can anticipate a smaller time frame, so minor structure break above old highs to get another trade in the opposite direction. Okay, so that's it for this video. I will see you in the next one.